Hey guys, welcome back to the channel. I hope everyone is doing okay. So sorry for the delay. Originally I was going to do like the monthly Zega update for August, but the Defiance and Yieldmax funds haven't fully updated their information as of like the Friday's close. For example, like the price and the shares outstanding and all that kind of good stuff. But I'll try to get to that like tomorrow. Sorry about the background noise. So in the meantime, I found something in like the SEC dumpster, so maybe we'll just go over this today, and then we'll get to the Zega monthly update tomorrow, or later, depending on when they update the website. So this could be interesting, because these are straight from Tidal, and these are what they call like two fire funds, so like the financial independence, retire early kind of movement. So I think they want to try to capitalize on that. And just as a matter of disclosure, I still have my high yield allocation. I think like some people were maybe freaking out, but I think everything should be okay. But it's still election season, so there's should be some more volatility in the months to come. So let's hope nothing crazy happens. But we should just be prepared. And just to note, these funds are not SEC approved. So this was filed on August 13th, and they're saying 75 days after the filing period, there might be like some type of ruling. So that'll place us like around October 27th ish. So hopefully by then we'll have like a final decision if they'll be approved or not. So these are interesting in that these are called fire funds. Like the first one is the wealth builder. So these are like more capital appreciation, and then ticker symbol is FIRS. Unfortunately, there's no expense ratio yet, and I have a bad feeling that these might be pretty expensive at least like 1% or more. And these are going to be like a fund of funds. So similar to how YMAX is set up, like it's YMAX and YMAG, or just like a fund of like the different yield max products depending on how like what you want. So if you want everything, like you'll go for YMAX. If you just want the Magnificent Seven type of stocks, you'll go for YMAG. But for this, like the FIRS, this is a little bit more open ended. So I thought at first like they might be just going for like the title managed funds, but they're leaving it open ended in the language so that they could maybe possibly open it up to ETFs that are outside of like the title management. So they want to go for like things like kind of like an all weather type of fund. So like the prosperity, while like for example like right now while things are still good, ETFs will take advantage of that. Then they have like ETFs for like recession, and then ETFs for inflation. But of course, like I still want to see like what's actually going to be in them. I mean, it's nice that they talk about it in the prospectus or the proposed prospectus, but we just have to see. And then like the different asset classes, potentially U.S. equities, recession would be gold, and then inflation, short-term treasuries, and then deflation have aggregate bonds. So again, we'll just have to see what this looks like. So it could like for like the bond parts, or even maybe something in between like the short-term treasuries and aggregate bonds. So for example, like U.S. equities, it could be like something like a YMAX, or maybe triple QT, and then for the gold, there might be like GDXY, like because they're already like title managed, and then for the treasuries and the aggregate bonds, I'm thinking maybe like TLTW, or maybe like something like HYGW might potentially be like a candidate, or it could be well, it can't be the theta because it's not truly bonds, and then unfortunately Trez unfortunately got delisted, so that could have been eligible for that, but we'll just have to see. And then in terms of like portfolio holdings and like the construction, it says here like they'll typically hold between like 10 and 25. So 25 might be a lot. I think somewhere closer to 10 might be better, just in terms of like just like management like for yourself, like if you want to keep an eye on these guys to see like what they put in there. And then the second one, the the FIRE funds is the income target ETF, so FIRI. Again, there's no allocation expense ratio for this, and it's very like a similar setup. Oops, sorry. Let me go back here. So these will try to hold like the high yield securities. So I'm assuming like a good chunk of this might be like yield max and defiance type of products, and then also there's like potential for like leverage, and then they'll also like monitor like the credit quality and duration of like, I guess, like the normal ETFs if they decide to put those in there. And then they also have like cash equivalents and low volatility ETFs just to kind of balance out like the income. Maybe like just to something that has like some growth potential just to kind of balance out any potential NAV erosion here. So like, they're going for factors such as like low volatility, duration, like high credit quality. And I'm a little nervous about the leverage, but again, we'll have to see like what they actually put in here. Again, like the portfolio construction, that it'll typically hold between 10 and 25 underlying ETFs. And it's going to be actively managed. So again, I think these will probably be, kind of more on the expensive side, like at least 1%. And it's interesting here, like the language, like the fund portfolios out reallocated to seek to achieve like the minimum target yield on a monthly basis. So I'm kind of curious to see like what type of yield. I'm guessing they're gonna probably try to go for at least like 20, just to at least match like something like SPY-T or triple QT. I'm hoping for more, but again, it depends on what they put in here. And they'll distribute income on a monthly basis, so that's good to know. I would have preferred weekly, but can't have everything, I guess. And then something like some more verbiage in terms of like what they potentially put in there, like so they could put single underlying security ETFs. So these could potentially like for example, like the Defiance recently put out like that leveraged 1.75x on MicroStrategy, so that could be a candidate. And then the commodity ETFs like the GDXY could be something that could put it in there, like multi-asset ETFs. So it's kind of open, and then the long short ETFs. So maybe some of the pro shares or Direction funds could be eligible as well. And then in terms of like, portfolio managers, so Michael Venuto, I guess some of you guys know, is manages like the YMAX and the YMAG and the OT. Daniel Weiskopf, that name should sound familiar as well, for people that invest in the Defiance Yield Max ETFs. So for myself, I want to wait and see, because I could see this being like a really popular product, but I could also see this becoming like a dumpster fire as well. It depends on how like they manage it. So I'm hoping for the best. So I mean, it's good to see like people trying to like push like the high yield war as far as it can go. To me, like I think like for me, since I'm kind of on like the retirement track, the income one, like the FRRI, is probably more interesting to me. But of course, like if you're on the younger side, or like you want to take on more risk, like maybe the FIRS could be interesting to you. So hopefully we'll have a decision like sometime in late October. And of course, like this is just my opinion. I think we still have to stay on top of our investments and your hedges, especially with what happened in August. So if you can like and subscribe to try to kind of continue these videos, super thanks, I really appreciate it. So thank you for watching, and I'll see you in the next video. Bye now.